I'm going to say I think silver prices will at least be above 32 this year. Pretty sure of that, pretty comfortable saying that. I think they probably will be closer to 35. And I think for next year, 40 is very likely, and potentially as much as at least touching a $45 level sometime next year. I just think we're in this wave of, there's so many things that are supporting silver, and both industrial demand. Same conference I was at last week. Some of your viewers may know someone who is very, very accomplished in the silver space. A guy by the name Tom Kaplan, who is behind the Electrum Group, brought multiple companies, silver producers to market, manages money in this space. They were one of the world's largest private minerals rights holders globally at one point in their history. This guy knows what he's talking about, and he's a true silver bull. I asked him where he thought silver was going, and he said, in this cycle, triple digits, no problem. So yes, he's a bull. So, take that with a grain of salt, but I'm fully on board with that. I like to say kind of one last thing, which I alluded to earlier. There's a group out of New York called Gehring and Rosenzweig, and Leigh Gehring used to manage the world's largest commodities fund several years back. He thinks silver is going to $500. But more importantly, I came across something they said about the uranium market not that long ago. And so, and when I saw it, I thought, oh my goodness, this is a perfect parallel for what's going on with silver. So they said, we became uranium bulls 5 years ago. We saw that the market had quietly slipped into a deficit position, and that utilities were starting to tap into secondary supplies. And we knew that those supplies were finite and that uranium would have to start moving in a considerable way. So if you look at what happened in uranium in the last few years, it was for multiple years bottoming at $20, $30, bottomed somewhere around $23, and we're around $80 today. And when it started to move, it absolutely took off. And what we've been talking about in the last sort of 30 minutes or so in terms of where the silver market is, in terms of structural deficit, in terms of secondary supplies that we can tap into to meet this excess demand and the finiteness of these secondary supplies, this is a perfect parallel with uranium. And I've said, silver is the next uranium, I shouldn't say except. Uranium has gone to $80, has maintained those levels. It's been very steady. I think we're going to see a tremendous sustainable run up in the silver price, and the new floor is going to be a lot higher. I think it's going to be probably somewhere above $50, which has been its all-time high for, 50 years or so.
Gold and silver are at a pivotal moment in history, with both metals poised for substantial gains in the years to come. While silver often gets overshadowed by gold, it is becoming increasingly clear that both metals play complementary roles in the financial and industrial worlds. As Andy Schectman and other experts have pointed out, the dynamics of the silver market are unparalleled. The potential for silver to achieve triple-digit prices is not just speculative hype. It is a realistic outcome based on the fundamental imbalances in the market. One of the most striking aspects of the current silver market is the sheer scale of its industrial demand. Elon Musk recently highlighted the transformative potential of solar energy, and with silver being a key component of photovoltaic cells, the metal is more critical than ever. The renewable energy revolution is no longer a distant dream. It is a reality that will drive silver demand to unprecedented levels. When a visionary like Musk talks about the potential of solar energy to power the entire United States, it underscores the role silver will play in shaping the future. Beyond industrial demand, central banks and governments are making aggressive moves into silver. Russia's decision to add silver to its strategic reserves was unexpected and unprecedented. India's massive silver purchases, totaling between 800 and 900 million ounces over the past 3 years, further highlight the metal's importance on a global scale. Even China, already a major silver producer, is buying silver directly from miners in Latin America. This level of accumulation by major players signifies a growing recognition of silver's value, not just as an industrial metal, but as a strategic asset. Despite its growing demand, silver has been held back by decades of price suppression. Western markets like COMEX and LBMA have long manipulated silver prices, with large commercial banks holding massive short positions. This artificial suppression has created an incredible buying opportunity for those who can see through the noise. As Andy Schectman aptly puts it, this is the trade of a generation. The suppressed prices make silver one of the most undervalued assets in the world, offering low downside risk and extraordinary upside potential. The silver-to-gold ratio is another compelling reason to consider silver. Historically, this ratio has served as a reliable indicator of silver's potential to outperform gold during bull markets. With the ratio still far above its historical norm, the opportunity for silver to close this gap represents a significant profit potential for investors. As silver prices rise, this ratio will narrow, amplifying returns for those who are positioned correctly. Gold, of course, remains the ultimate safe haven and the cornerstone of the global financial system. Its status as the only other Tier 1 reserve asset alongside US dollars underscores its enduring importance. Central banks around the world are increasing their gold reserves, recognizing its unparalleled value as a hedge against inflation and economic instability. The idea of revaluing gold to stabilize government debts is gaining traction, with some experts suggesting that gold could be pegged to a new monetary system at prices as high as $130,000 per ounce. While this might sound extreme, it reflects the growing acknowledgement of gold's role in restoring monetary stability. The actions of BRICS nations and other non-Western countries to accumulate gold and silver represent a significant shift in the global economic landscape. By diversifying their reserves away from the US dollar, these nations are preparing for a world where the dollar is no longer the dominant reserve currency. This trend poses a direct challenge to the Western-dominated financial system and underscores the strategic importance of precious metals. Looking ahead to 2025, the outlook for gold and silver is incredibly bullish. Gold is expected to break past $3,000 per ounce, with some analysts predicting levels as high as $5,000. Silver, with its higher volatility and dual demand, could reach $75 to $100 per ounce. These projections are based on the current trends in monetary policy, industrial demand, and central bank accumulation. As inflation rises, currencies weaken, and geopolitical tensions escalate, the case for owning precious metals becomes even stronger. For investors, the message is clear. Gold and silver are not just safe havens. They are strategic assets for navigating an uncertain future. The current dynamics in the precious metals market offer a once-in-a-lifetime opportunity. Whether you are looking for a hedge against inflation, a way to diversify your portfolio, or a play on the renewable energy boom, gold and silver provide unparalleled value. As Andy Schectman often says, this is the trade of a generation. Don't let it pass you by.
The Bank of Russia came out and said they are going to start accumulating silver every day for the next month, adding it to their strategic stockpile. That was something that was somewhat shocking. We've never heard that from a government, really, to my knowledge, before. You have India that is who has bought, I don't know, between 8 and 900 million ounces of silver over the last 3 years. They're buying it at levels that far exceed any central bank purchasing. You have China, as I mentioned in an interview I did with Sean Kuhn from Dolly Varden, who confirmed they're flying all around Latin America, buying doré and concentrate from the miners directly. They're the second largest producer of silver in the world. And David Morgan said, well, they'll actually tell you they're the first largest. Who knows? But the point of it is that you are seeing governments accumulate silver and it being bled dry from the exchanges across the globe. To me, it represents the maybe the best value I've ever seen, ever, in any commodity. But in the end, you're right. In the end, gold is the only other Tier 1 reserve asset. I wouldn't count gold out. But when we talk about, value, it's pretty darn hard to ignore the value that is found in silver. When the dust settles, I think the place to be is gold, and you play that silver to gold ratio. To me, it's the trade of a generation. When someone says to you, you can double your position, it usually comes with great risk. I look at the silver play as one of the greatest asymmetrical risk reward trades I've ever seen, meaning low downside, high upside. Trump was Musk was on with Joe Rogan recently and said that you could create, if I think it was 100-mile by 100-mile grid of solar panels, you could power the entire United States. If you pull it up, just Google it, it'll pop right up. It's about a 20-second clip. And with a guy like him in there with that kind of pull, who knows what the future is for silver? I do know that when 8 commercial banks hold the largest short position that of any commodity traded on COMEX, as Ed Steer showed on an interview with your father not too long ago, you ask yourself, why the hell would they do that? Why would 8 banks be shorting a commodity like that naked, meaning they don't have the silver to back it up? For what reason would they risk that? And why is there between 4 and 6 billion ounces short on the LBMA? I think these kinds of manipulations that the West has been involved with for a very long time is being exploited by these countries slowly. So I think it's the trade of a generation. And I think the silver to gold swap is as good of a speculation as I've ever seen in my career. Gold is the ultimate place to be in the end. If I had only one trade to make, period, it would probably be in gold because it is the only other tier 1 asset in the world. And I think when you're making decisions like this, maybe profit isn't your primary concern, although I think gold will go higher than people think possible because it will go much higher to be pegged to a new system, whether it be one that Trump issues. And I think that's how the West could derail a lot of the demand for the BRICS currency, is to be the first one to do it. There's a lot of talk of it. You know, you have the Senator Loomis from Wyoming who talks about revaluing the gold. You have Judy Shelton who talks about adding gold into the system to gain a trust. Who knows? But in terms of value, in terms of upside potential, in terms of asymmetrical risk reward, I have never seen anything like silver. And look, the market, as everyone knows, can stay irrational longer than people can stay solvent, or longer than people's patience will allow them to stay rational. I just still think it's hard to ignore the value that has been created through suppression on COMEX and the LBMA, and that seems to me to be challenged. It's being challenged right now, and I think it's never been challenged. These countries were not in a position to do so. They are now, and they're coordinated as well. They're coordinated and very wealthy, and they understand what we're doing, and they understand.
The silver market is one of the most intriguing and undervalued sectors in the financial world today. Despite its crucial industrial applications and historical role as money, silver remains grossly underpriced relative to its fundamentals. The next few years could bring a significant revaluation of this precious metal, aligning its price with the realities of global demand and supply. Let's dive deeper into why silver, and by extension, gold, are poised for a dramatic breakout. Central banks around the world have been quietly but aggressively increasing their holdings of precious metals. This trend is particularly noticeable among BRICS nations, which are actively diversifying away from the US dollar. Russia, for instance, recently announced its intention to add silver to its strategic reserves, a move that surprised even seasoned market watchers. This kind of institutional accumulation is unprecedented for silver, signaling a shift in how the metal is perceived. It's no longer just an industrial commodity. It's becoming a strategic asset in a world that's increasingly multipolar. China, already a top producer of silver, is now aggressively buying silver from miners across Latin America. India, another heavyweight, has purchased nearly 900 million ounces of silver over the last 3 years, dwarfing even central bank gold purchases. These actions highlight the growing recognition of silver's importance, both as a hedge against currency devaluation and as a critical resource for industrial innovation. The industrial side of silver cannot be overstated. As Elon Musk recently pointed out, a solar energy revolution is well underway, and silver plays a pivotal role in this transformation. Photovoltaic cells, the key components of solar panels, rely heavily on silver. Musk's vision of a 100-mile by 100-mile grid of solar panels powering the entire United States might seem ambitious, but it's technologically feasible, and it would send silver demand soaring. Beyond solar, silver is indispensable in electronics, medical applications, and even the automotive sector, particularly in electric vehicles. Other green technologies, such as wind turbines and advanced batteries, also depend on silver. As governments worldwide push for clean energy transitions, silver's role as a critical material becomes more evident. The International Energy Agency, IEA, projects that renewable energy installations will increase dramatically over the next decade. This growth could create a sustained and significant increase in silver demand, putting immense pressure on already tight supplies. Despite these bullish fundamentals, silver prices have been artificially suppressed for decades. Large commercial banks hold massive short positions on COMEX, creating a disconnect between the paper and physical markets. However, this manipulation is becoming increasingly untenable. As Andy Schectman aptly describes, this is the trade of a generation. The artificially low prices offer an extraordinary buying opportunity for those who can see through the market's facade. Consider the parallels with the uranium market, as highlighted by Goering and Rosenquag. Like silver, uranium spent years in a structural deficit before its price began to soar. From a bottom of $23 per pound, uranium shot up to $80 as supply shortages became evident. Silver is now in a similar position, with secondary supplies dwindling and a growing structural deficit. When the market finally reacts, the price of silver could explode, creating a new, much higher floor. Gold, meanwhile, continues to solidify its role as the ultimate safe haven asset. Unlike silver, gold's primary value lies in its monetary properties. It's no coincidence that gold is the only other Tier 1 reserve asset alongside U.S. treasuries. As central banks stockpile gold, discussions around its potential revaluation are gaining traction. Senator Cynthia Lummis, for example, has floated the idea of revaluing gold held by the Federal Reserve to address national debt issues. At the same time, analysts like Jim Rickards suggest that gold could be pegged to a new monetary system at prices as high as $27,000 per ounce, or even more. The idea of revaluing gold isn't far-fetched. Historically, gold has been used to stabilize economies during times of crisis. In 1933, President Roosevelt devalued the dollar by 40% by raising the price of gold from $20.67 to $35 per ounce. A similar move today, albeit on a much larger scale, could help offset national debt and restore confidence in the financial system. Such a scenario would be incredibly bullish for gold and, by extension, silver. Looking ahead to 2025, the price predictions for gold and silver are striking. Gold is expected to break through $3,000 per ounce, with some analysts forecasting levels as high as $5,000 or even $10,000. Silver, often more volatile than gold, could reach $75 or even $100 per ounce. These projections are not mere speculation. They are grounded in the realities of monetary policy, industrial demand, and central bank accumulation. As we approach these potential price levels, the dynamics of the market will shift dramatically. Currently, much of the buying in the precious metals market is being driven by central banks. However, as prices rise, private investors, including pension funds, hedge funds, and retail buyers, will inevitably enter the fray. When this happens, the competition for limited physical supplies will push prices even higher. It's also worth noting the broader macroeconomic backdrop. Inflation remains persistently high, eroding the purchasing power of fiat currencies. At the same time, geopolitical tensions are escalating, creating an environment of uncertainty. In such conditions, gold and silver are not just safe havens, they are necessities. For investors, the current environment offers a unique opportunity. The silver-to-gold ratio, which measures the relative value of the two metals, remains far above its historical average. This suggests that silver has significant room to outperform gold in the near term. However, both metals are essential components of a diversified portfolio, offering protection against inflation, currency devaluation, and systemic risk. The road ahead is clear. We are entering a new era for gold and silver. Central banks are buying in record quantities, industrial demand is surging, and the economic realities of inflation and debt are becoming impossible to ignore. Whether you're an experienced investor or just beginning your journey, now is the time to act. The fundamentals are strong, the opportunities are abundant, and the potential rewards are unprecedented. As Andy Schectman says, this is the trade of a generation. Don't miss your chance to be part of it. Whether it's gold's unrivaled status as a monetary safe haven or silver's explosive potential in both industrial and investment markets, the case for precious metals has never been stronger. Stay informed, stay prepared, and make sure you're positioned to benefit from what promises to be a historic revaluation of these timeless assets.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.